Welcome to Under the Basswood Tree with Basswood Counsel, a podcast where we bring you brief, valuable conversations and insights to help you navigate the complex world of business transactions. From cross-border deals to international tax structuring, we cover topics across all industries. Our team and colleagues will share their insights and provide practical tips on key issues for you and your business. Let's get started.
Good afternoon. Welcome to the Under the Basswood Tree podcast. My name is Jephte Lanthia. I'm a partner at Basswood Counsel. We are a boutique firm focusing on M&A, tax, securities, and cross-border transactions. My practice focuses on corporate and securities. I advise clients, including investment funds, broker dealers, and other business on issues relating to the securities industry and blockchain-related transactions. Today, I'm joined by my colleague, Rudo Mugwagwa. Rudo's practices focuses on corporate and securities and investment funds, private equity, hedge fund, and compliance, in general compliance for businesses and throughout the life cycles. Thank you, Rudo, for joining me. Today, we are going to discuss the regulatory landscape surrounding the crypto industry. As the audience already knows, there's been a lot of development activities in the crypto space, including recent legislative activities. So we are witnessing a landscape where America, or the US, is in the frontier of becoming the crypto capital of the world. In fact, President Trump, when he was running, he proposed to make the US the crypto capital of the world.
Yeah, we've been receiving a lot of questions as a result of all this activity. A lot of questions from clients and colleagues in industry. So what does some of this activity mean? That's something we're hoping to discuss during this podcast episode. So I'm going to dive into some of the popular questions that we've been receiving from clients and from colleagues in industry. So Jephte, one of the things you've rightly pointed out is that we're seeing a historic shift in how the U.S. approaches cryptocurrency and financial technology, moving from a stance of regulatory skepticism to strategic enablement, part of a very, a very ambitious plan to establish America as a global giant in crypto. Is this something that you agree with, or are you a bit more on the skeptical side of it?
Overall, I would say that I generally agree, but I guess for housekeeping, let me say that anything that we discuss here, we are simply discussing the landscape, the regulatory landscape. Anything that we are discussing here should not be crunched to as legal advice. If you need legal advice, feel free to reach out to us. But having gotten that out of the way, so we are seeing a shift, and whether it's for the good or for the bad, again, you can make that decision. But we are seeing activities, more activities in the U.S. As I mentioned, President Trump, his administration was determined to make crypto to make the U.S. the crypto capital of the world, and have more of a regulatory regime, the lay of the land, so companies in the space could know what they're doing. And again, what is good or bad is up to you. If you factor for before Trump was president, he was skeptical about crypto, right? And now his family's involved in crypto. So again, don't attack the messenger, right? Just attack the argument. So take those things out of the way, out of the devoid of politics and personal interest. Activity, economic boom in the U.S. is a good thing. Investors having access to products is a good thing. Again, provided that we can have the guardrails to protect investors and protect America and American investors. And by virtue of that, the president had the presidential working group so which pretty much, direct the federal agencies, the SEC, the CFTC, all the federal agencies to come up with a framework, how we regulate, how we approach cryptocurrency, how we approach digital assets. So again, I think that's a good thing. Economic activity, I think is a good thing. Again, with the caveat, we have some protections.
Yeah, I mean, yes, of course, as lawyers, we're always going to love to see a bit of regulation here and there. It keeps us busy. I think before we even dig deeper into the subject matter, is it safe to say we now have agreed upon a definition of what cryptocurrency is? And if there is an agreed definition now, what is that definition? Just to level set the conversation.
Yes, I'm sure we have a sophisticated audience, but for some of us who will not be familiar with cryptocurrency, so we have a definition. Okay, so we have cryptocurrencies, actual currencies like Bitcoin, right? Came about 2009. I think there are like 21 million Bitcoins, and so there's no Bitcoin. So because of their scarcity, the price of Bitcoin, goes up and down. So again, this currency, it functions. It functions as a currency, right? You buy, you sell, money. So and then you have stable coins. So stable coins are, I guess, function as currencies or asset, and that they are again stabilized by something else. It could be by cash reserves. It could be by treasury. So they're pegged to something where the buyer or investor has, again, where my stable coin is pegged to such and such. And then another product, and especially Ethereum, right? I guess that's the gas, for smart contract, that processes those transactions. Again, Bitcoin and cryptocurrency, all of those, again, they run on smart contracts. And for background, smart contracts, typically, if A happens, then B happens, without necessarily having a middleman, and everything is recorded on the blockchain, so it's, immutable, so you cannot change it. So those are the product or the terms you'll find. And then we have DeFi, decentralized finance, which is different from, I guess, traditional finance, right? If you're DeFi is DeFi, right? If you are, again, certain banking activities, like if you lending, insurance, etc., where you kind of cut the middleman, so the settlement time can be quicker and the fees can be cheaper, and then you cut the middleman. And certain parts where banking is not available, that could be something useful for certain consumers. So again, we are seeing a lot of activity. We have always seen activities in Asia, Singapore, those countries. We've seen activity in Malta, and even in Africa. So there's always been activity, but the U.S. has generally taken a reserve, right, approach to it, again, especially with previous administrations, And again, legitimately so, right? Has was taking a reserve approach. Again, we are the biggest market, biggest economy, I guess, next to China, right? Well, we are one of the two.
Yes, and we know that America wants to lead, right? And part of that is being very aware of the risks that are out there with some of these products. I think there's, you've spoken now sort of about the, what is cryptocurrency, some of the products, some of the players that are in the crypto space. Let's shift a bit to taking a look at, the agencies that are involved. We know that, sometimes people say the Securities and Exchange Commission and Commodities Futures Trading Commission, they kind of, fought for the territory to be able to regulate cryptocurrency and some of the activity going on there. Are you able to dig in a little bit in breaking down some of the agencies' roles in this space at this time? And sort of where we're going in terms of their role in that environment.
Certainly. And at the end of the day, when we're talking about, digital asset and, assets and cryptocurrencies, we're talking about, again, money and activities, right? And the role of government is to regulate certain activities. Again, so for the most part, there are some guardrails with that, right? So and so that's why we have some of the federal agencies, which have one for a while. And with crypto, again, some of the purview would fall under the SEC, the Securities Exchange Commission. And again, if someone is raising capital, if they're trading asset, do those assets, function as securities? Does the raising capital constitute an investment contract? So they would fall under the purview of the SEC. For like a quick background, the SEC was one of the last agencies to opine on crypto. I think it was the CFTC, RIS, etc. But the SEC was one of the last ones to opine. So you have the SEC, again, to the extent those assets, function as securities or they are traded as securities, it falls under the purview of the SEC. And then you have the CFTC, right? We're talking about, commodities, right? The Commodities Futures Commission. To the extent, again, you have Bitcoin or certain assets that functions as commodity. So the CFTC would regulate it. And again, we're talking about currency, again, money. You have FinCEN, right? Again, to control illicit transactions. So again, we know that we can use crypto to make payments, and the dark web. You can try to funnel money through buying currencies. Again, so the FinCEN, would have some jurisdiction, over that. You have the OCC. National banks, so banks that deal in cryptocurrencies, so the OCC, the FDIC have regulation over those institutions. You have the CFPB, the Consumer Financial Protection Bureau, right? Again, when we're talking about activities and products, when you're selling it to consumers, it cannot be fraudulent. There's the protection. So again, clients, hey, if I purchase an asset that does not fall under the purview of the SEC, does not fall under the purview of the CFTC, or that does not fall under the purview of a bank, who do I go to? Then you have the CFPB, and then you have the FTC, and of course our very own favorite tax, RS, right? So again, to the extent that you or sell products get paid to cryptocurrency, those are considered, I guess what, realized transactions, right?
Yeah.
Taxable. So and that's it. I think that IRS was one of the first agencies to opine on crypto. So those are the agencies that would fall, that would regulate again the activities, the product. And I said it again to reference back to what I said earlier about the presidential digital working group, direct federal agencies. So those are all federal agencies that again regulate certain products and activities.
Yeah, and we're seeing that. I know, currently there's quite a bit of buzz around the Genius Act. We know that one of the pillars is, innovation and infrastructure building, which I think, speaks to the agency's roles too, right? And putting in the discussions around what those guardrails look like across industries, but without stifling the innovation, right? One of the things that's I think is interesting, I know you did a podcast with one of our colleagues on the SEC chairman, right? The new chairman that's in. Can you provide a bit of a brief background on how this could impact the approaches that the SEC chooses to take in this regulatory, the regulatory environment that we're in now under the new administration?
Certainly. And you referenced the Genius Act, which we'll take a touch on briefly later if we have to, if time allows. But right. So I guess the Genius Act is a legislative, right, development where you have Congress passing laws laws, right? And surprisingly, at least in the House, it was fairly bipartisan, right? And in the Senate, but 18, I think, 16 or 18 Democrat senators voted for it. So it was somewhat bipartisan. So you have legislative, developments, and then you have again the regulatory, like the agencies, and to step back, the SEC, which is primarily my background. We're talking about, I guess at least the past three chairmen, right? So you have Jephte Clayton was appointed under the first Trump administration, and there was during 2017 and 2021, and there was like almost at the height of the crypto boom. It was when it was when what some would call the Wild Wild West, right?
Yeah.
And I remember I was practicing a lot in this space, and it seems like everyone in their uncles, and members, right?
Yeah.
Raising ICO. Everyone was doing the ICO token, initial offering.
Crypto funds.
Crypto funds, yes. Crypto funds, ICOs. And Jephte Clayton, for the most part, took a reserve approach, right? He did make the statement that I have not seen an ICO that's not a crypto offering, a securities offering. But for the most part, he's under him. The SEC took somewhat of a reserved, cautious approach, and of course there was some investigations, etc. Enforcement action they were at play. But for the most part, I think most people would say it was reserved, neutral. And then again, when Joe Biden became president, he appointed Gensler. Again, Gensler took, again, depending on, I guess, your take, but I think most people would agree his approach was a little bit more, I guess, strongly investor protection. So some people felt that it was stifling innovation, and the argument has always been not only it was stifling innovation, but it wasn't clear as to what as a company I can do or not do, right? And where it's like, well, I guess regulation by enforcement, right? You never told me what I cannot do, but when after I've done it,
What I can't do.
yes. So under Gensler, again, the market felt that it was being stifled, and we saw a lot of companies probably going, overseas or not pursuing projects, again, because of the regulatory uncertainty. And then again, now you have a change of administration with Trump second term, appointing Paul Atkins, who, by the way, was a former commissioner years prior. And take a push that is more like, again, I would say somewhat pro crypto, but with I guess with the notion that let's have more clarity. Let's have more clarity. So market participants know what they're expecting. Let's make it, let's have rules that address the products. And again, you couple that with, again, the mandate from the administration saying, hey, we want you to do X, Y, and Z. So now we're seeing, I guess, the pendulum has shifted to where more opportunities, more opportunities, and with at least a promise of more clarity. The SEC has the crypto task force, and again, public right guidance, roundtable, and even recently the chairman had a speech of Project Crypto, again, where the SEC would provide more clear rules and so market participants will know how to proceed. And part of the mandate also from the president working group is like, let's regulate it where we go after primarily fraud, right? So primarily fraud, if it's something I guess technical with like lack of registration, I guess the banks like should the agency go after it, And now we are seeing a lot of cases. I remember what the cases that seem to be coming up, a fraud. But at the same time, again, that does not say market participants should not follow the rules. Should not register. Again, it's a discretionary approach from the agency. So I always tell clients, just because other folks have not gotten caught on this, or just because it has not been a priority, it doesn't mean that you should just go ahead and think I can do X, Y, and Z and get with it. So that's a change that we are seeing with the new chairman.
Yeah, it's interesting. You mentioned, clarity, that there's a clear push towards clarity without, I guess, stifling the advancement, right? The advancements that they're making under the new administration. But we've heard that, regulation by enforcement era is officially over. We know they're trying to reduce the red tape, so that there's more innovation, right? That's what comes with being a giant in the global community. What does that actually mean, though, for crypto companies that are currently operating today?
It means clarity is good, right? Knowing the rules of the road. And for companies, it means they can plan accordingly, right? If I'm bringing a product, I know how to plan, how to structure the product, how to structure the service. So I'm not thinking back in my head, am I going to get, a zero fine? So more clarity for them as far as planning. And even, again, going back to planning, if you have M&A activities, so if I want to purchase or if to acquire a company in the crypto space, again, with more clarity, I can assess whether this company, I can really, objectively, I guess, reasonably assess the risk associated with acquiring that company. So again, for businesses, again, that clarity allows them to again innovate within the rules, and I think that's the balance, because you're always going to have folks who are going to commit fraud, right? It's human nature.
Yes. Bad actors come with the good, right?
Fraud is all right. It's human nature, and if they are going to commit fraud, they'll commit fraud whether or not there are rules around it. But you also have folks who generally have a business model, who generally try to provide a product or service. They just don't know how to do it properly, and so that clarity helps them. And even for us as lawyers, right? When we advising clients, we can advise clients, say, well, this is this is what the rules are. We cannot guarantee, but there's more clarity, as to what to expect. So overall, I think that's a good thing for the market.
Yeah, and I think with the SEC voluntarily dismissing the lawsuit against Binance, that's also that also sends a message, right?
It signals it. Certainly, it does.
Yeah. So I know. Yeah, I mean, it's Binance, right? And I think obviously there were a lot of concerns with what the outcome would be, because it's such a huge player in the market. So having discussed this, what is you've touched a bit on what it means for tech companies, right? This new position that the current administration has taken, right? I wouldn't call it new, but I guess the revived approach. One of the things I think is important is for people to understand how we as legal professionals would guide them, right, as they start up these fintech businesses. So if a fintech company were to come to you now in this current environment, wanting to launch a new product, what would be your legal roadmap?
Well, first, allow me to do a shameless plug for Basswood Counsel.
I'm not against it.
All right. We just one thing we pride ourselves at Basswood, at doing, and one thing, I even prior to joining Basswood, I pride myself in doing is learning the business, right? Learning your client's business, learning your client's objective, right? And I always say, like, when clients come to you, they have a dream, they have a mission, you're trying to execute it. And your job as a lawyer to advise them along the way to how to get from point A to point B. So if a client would come to me and say, hey, I'm launching a product, I'm launching a business that's going to operate in the fintech space, right? So again, my initial question would be, okay, are you launching a product? Are you launching a service, right? Are you, offering, are you going to raise capital, offering securities? Are you going to, function as a money transmitter? Are you going to function as an exchange? Are you going to lend? So all those questions would trigger different regimes. Like, if you are going to function as a money transmitter, so we have to have certain, compliance relating to state money, trading laws. If you are going to raise capital, right, we have to have certain products, with respect to SEC. If you are going to provide investment advisory services, etc. So again, my initial question would be, what are you trying to do? Let me understand it. And once I get a better sense, right, so we can assess the risk accordingly. So once I get that sense, I would say, well, let's come with certain compliance, requirements that you need. If you will need to register in certain states, again, depending on activities, do you need licenses? Again, depending on the activity. And once you are established, once you are operating, what duties do you have to your investors? What duties do you have to your consumers? What obligations you have to get to the regulatory bodies? Again, I mentioned the FTC, the CFPB. Again, you may not be operating as a money distributor or on the securities law, but there are other regulatory bodies that would have jurisdictions over your activities. So again, we would approach it. How do you have operational guardrail, operational system to allow you to function where, again, you're not worrying whether there's a potential lawsuit or whether there's a potential action going on. And of course, ongoing compliance, all right? To your regulators, to your investors. Being a securities lawyer, my approach is oftentimes disclose, right?
Yeah.
You don't want to disclose the secret sauce, right? You don't want to, keep, what makes
you gotta keep some of the magic.
Yeah, you have to keep it, right? but you have to disclose what's necessary. Again, because sometimes, you may have an issue where the lack of disclosure was not necessarily intentional, right? Just omission of your negligence, but you still find yourself, you may still find yourself facing a civil fine, right? So my job as a lawyer is like, okay, well, this is what you are going to do. How, what are the parameters within which you should work in, and how do we get you from point A to point B, and the other lines in there, to the point, even if you taking of an exit, right? How do you exit through an M&A, through IPO? Again, that whole process, from A to B.
Yeah, I mean, you've called out one of the things, I guess, that that stress clients out, right? When you start talking about compliance, it's sort of always a drain, and they immediately think of the cost associated, when you start talking about complying. But it's such an important thing to do upfront, at the start of your journey versus trying to comply once you've already, gotten well down the line. I know one of the things you and I spoke about was the fintech laws and regulations report. I think it's 2025 report, correct? And in there, they mentioned some of the biggest legal risks. What were some of the risks that you thought were really important for clients? And I guess obviously anyone listening to the podcast, what are some of the biggest challenges that really stood out to you that were mentioned in this report?
But of course, I guess fraud is not a risk, right?
Yeah.
Unless you do it intentionally, right? Like, if you go before me, disclosure, disclosure, misrepresentation, again, a client saying I'm going to do X, Y, and Z and end up not doing it, perhaps because, they forgot to do it, so, or I'm going to, to provide X services that do it. Another way to say again, not necessarily having the proper procedures, whether it's regarding privacy, how do you maintain, personal information. So those are certain ways. And now with AI, right? A lot of companies use AI, right? So that's like a whole other topic in itself, right? Like, how do you use AI? Like, do you actually use it, right, in the company? If you say you use it, how do you use it? And if you are using it, again, how are you obtaining and retaining the information? How are you processing it?
Yeah, especially when you consider obviously the cybersecurity breach
yes,
issue.
certainly.
And everyone obviously now is very sensitive about their privacy. Data protection laws globally are very, every country, right, has tried to adopt some measure of data protection regulatory framework, right? And I think obviously with AI and even now, even when speaking about cryptocurrency, of course, data sharing, it's a big deal to be able to share across. Of course, there's efficiencies that come with it, but of course, then you have to be sure how you're protecting people on your platform, right? So yeah, I definitely see why they would be keen to point out some of these security issues as a key part of the report. But just to shift focus a little bit to take a look at, I guess, one of the harder topics at the moment, and that's stable coins, right? And their role in the infrastructure, right? What are some of the legal issues you see? Having spoken a little bit about the legal risks, what do you see with stable coins? What should issuers be thinking about?
And good question. And even before we talk about stable coins, you mentioned global issues. You've practiced overseas, cross border, so
Yeah.
If your product is offered, or company operates cross border, you may have you have different regulations to deal with. If you are in the US, or if you're in in the UK. So and some jurisdictions may have stricter rules than others. So again, another risk again for clients would be, again, are we assessing all of those risks? Are we complying with all of those cross-border regulations? Again, are we finding the right counsel? To give you data back. So there's always a risk, that clients consider when they work cross-border. And and to your question about stable coins. So basically, again, as I mentioned earlier, stable coins, again, I'm like I guess be like, again, stable, right? As you mentioned. So they'll peg to something, right? To a currency, or or some kind of asset or security. And the part of the issue is like, is like, what are the coins, pegged to the right, securities, or the right asset, and is there enough reserves, right? And we mentioned the Genius Act earlier, and that's one thing that the Genius Act does. It requires that. Well, again, it provides more clarity, right? And it requires that stablecoins are pegged one-to-one to a high yield, not high yield, high quality, asset, like liquid securities, cash, treasuries, bank deposits, and there should be some reserves. Again, so customers or investors who buy the stablecoins, hey, something happens, this is what this is what I'm entitled to, or this is what I'm getting. So that transparency helps. And another thing about the act, it also requires third party auditing. So if I claim that my those clients are back 1-to-1 reserve, is there a third party auditing and making sure that what I say I'm doing is actually what I'm doing? So that's one good thing for the Genius Act with respect to stable coins.
Yeah, so I guess what are your key takeaways you think people should have, from the Genius Act, and what do you see how do you see this impacting businesses going forward, right? Of course, it's a new crypto regulatory landscape, but what does it actually mean for the businesses?
I guess it's a good thing, and I notice we are running out of time. And again, we'll get to all day about this, right? But I mean, the GS Act is a good thing, right? And then there's another bill pending, the Clarity Act, right? And I think I saw something recently where the chairman, Senator Scott, saying that he expects, after Labor Day, when they get back to a session, that bill, will pass. So again, the Clarity would provide, I guess, more guidance as well, like the SEC and the CFTC has regulations over stablecoins, who has jurisdiction over what, and would also provide a uniform framework. So again, as you know, we have 50 states. We didn't even touch on state laws. You may not be under the purview of federal jurisdiction, but depending on your activities, and if there's no federal preemption, you may find yourself under state laws. So the Clarity Act will provide, again, some clarity where clients can know, hey, I'm following, one set of rules happens to a 50. So again, that I think again that's good for business, right? And again, the clarity. And we are seeing a lot of activities. We're seeing IPOs. We're seeing IPOs, whether it's, I think it's Bullish, Circle, Figure. So there are companies that are doing IPOs or considering IPOs, right? So we're seeing a lot of activities again because there's more clarity and more of an appetite for crypto. And then we're also seeing SPAC deals, right? So for smaller companies wouldn't necessarily do the IPO out, they can buy, acquire, right? Publicly listed share and then go, which is like a quicker process. So go that route. So we are seeing a lot of activity in the space, and again, which is good. And like I said again, with the caveat that we are protecting investors, but it does not become the wild west. So I think it's good, and I think for us as lawyers, for market participants, it's something I guess for the market exciting to watch, right?
Yeah, it's exciting to watch. It's an opportunity to continue, developing your practice. Especially with your SEC background, obviously your perspective, is really helpful for clients, right? In navigating this kind of this kind of terrain.
It's been fun, and thanks for joining, and thank you, Rudo, for joining me.
We hope you enjoyed this episode. To stay up to date with the latest legal insights and Basswood events, please follow us on our Basswood Council LinkedIn page and visit our website at www.basswoodcouncil.com. Thanks for tuning in, and we'll speak to you next time.